California's Dream for All program can unlock $150,000 towards a down payment. But what most buyers don't realize is that this money can quietly cost them hundreds of $1,000s later on if they don't understand what they're signing up for. Today, we're breaking down what this program actually does, who it really works for, and the mistakes that can cause a lot of buyers to miss out on this time around. If you stay with us, this is what you will be walking away with. What most people miss about the Dream for All, how the lottery actually works, and what buyers should avoid before they even apply. Also, how this impacts your long term wealth. Yes, wealth, not just getting the keys. This is for buyers who don't want a house, they want to make a smart move. Mike, let's flip the script. Before we even talk about the benefits, what are the biggest mistakes you see buyers make Dream for All that cost them their chance before they even get started?
Well, that is a great question, and probably one of the most important questions when it comes to being prepared. And that is it. People wait, they procrastinate, they wait until the last minute. It's on their to-do list, but it's too low down on the list. And then by the time they reach out, the window is closing. So preparation in advance is probably the number one mistake that can be very costly. There's other things too. One thing comes to mind is working with the wrong lenders. There are lenders like myself who've been doing this program since it came out. We know exactly how to handle it. We have all the forms and everything that CalHFA needs to use. And if you're not using somebody who has done this year after year since this loan program came about, you're going to definitely have some hiccups that are going to be tough and potentially very costly to overcome.
Those are some great points and things that people need to look out for. Next thing is the top questions buyers are Googling are things like, is Dream for All worth it? And what is the catch? Like, what is the catch? In plain English, what is the catch, Mike?
And that's a great question. If you consider it a catch, the Dream for All loan program, the assistance that the buyers are receiving ultimately is money that they have to pay back. And the way in which it's paid back can be very confusing, but when you break it down, it's something that's easy to digest. And I'm going to give you an example. If you get the full $150,000, you will owe the full $150,000 plus a portion of the appreciation at the time that you sell the property, refinance and pay off the Dream for All loan, or do something else with the property, move out where you have to pay it off. And so that's the biggest catch there is that you not only owe the money you borrowed, but you owe a percentage of the appreciation from the time you purchased it until the value at the time that the Dream for All loan is being paid.
And to put that into perspective, you're going to be paying back money. It's not really coming out of your pocket. It's really coming out of the appreciation of the home. So we just have to remember that, again, this is money that you've earned on the property. And you're actually getting some of that appreciation back too, because the government is just getting their portion and you're actually still making money off this house.
That's right. And the thing to remember and why I kind of chuckle when I say the catch is because if you get 150,000 from this program, and let's say that equates to 20% down payment, that's the additional percentage that they're going to take back, which means that you are getting 80% while they get 20% of something you didn't have the day before you got this home. And so if you break it down into numbers, if the appreciation is $100,000, 20% is 20,000 and 80% is 80,000. So in a situation where you would walk away with 100K, in this case, you're walking away with 80 and you started with zero. So it's an amazing opportunity because most people are coming in with very little and walking away with tens or hundreds of thousands of dollars.
That's a great, great point. And that really leads me over to the next one. If a buyer uses the Dream for All and their home appreciates, how does the repayment actually work when you sell or refinance? You really kind of touched upon the selling, but what
Yeah.
happens with the refinancing?
Yeah, great question. So in the last few iterations of this program, CalHFA has allowed a one-time refinance opportunity in the event that all you're doing is getting a better interest rate on the first mortgage, which is the regular mortgage you're getting, not the Dream for All loan, when you do the refinance. And so if and when the rates get to a point where it would make sense, you can refinance and keep the Dream for All loan in place, which means that you do not have to then pay it back and do the whole shared appreciation. Okay. But in the example where you were, for instance, going to refinance and maybe pull some cash out, or you are going to sell or find some other way to pay off this loan, and you do pay back the Dream for All funds, here's how it works. Let's say you bought your home for $500,000. A few years later, you're now selling for $600,000. The difference there is $100,000. So, going back to the example, if the Dream for All program had provided the 20% down payment, you would owe that money back and you would owe 20% of the shared appreciation, which in this case is $20,000. So, in the event that you got $100,000 from the Dream for All program, you'd be paying back 120,000 and you'd be walking away with 80,000.
Like that you said that they allow that one-time refinance as long as you're trying to get a better rate, because that really aligns with what they've done in the past. Like my first home, honestly, it was a type of program through the state of California. And when I refinanced it the first time, they just let me get the lower rate and I was able to stay in the program. So that's great that they're still allowing that.
Yeah, the expectation is that they'll continue to do that. And usually, where they won't allow it is when somebody wants to, again, take equity out, where
Yes.
they say, well, if you're going to take the equity out, then you got to pay the Dream for All loan back. Or like debt consolidation, paying off other credit cards or car loans or other type of revolving credit, where again, you're taking money out of the house. But you made a great point a few minutes ago, which is that when you do finally pay off that Dream for All loan, and they have a clause, at least this was in the last few iterations of it, where you could keep it for 30 years and it would eventually go away. But for those that are not going to keep their home until the lifetime of the first mortgage has been paid back, in that situation, you're going to end up paying back the equity of your what you've gained, a portion of that. So you're not coming out of pocket. You don't have to go into your savings. You're going to take this earned equity from the appreciation of your home and then use that to give the money back and to walk away with your portion as well.
Yeah, that's a great point because that can cause confusion because we're using all this equity, shared appreciation, and that can just be really overwhelming. So I just want to just put it in plain language and then like you tell me if I'm like right or wrong or kind of hit the mark or not. So if you refinance and you refinance in a way that requires you to pay back the Dream for All contributions and the appreciation that you earned, it's not coming out of your pocket. It's coming out of the house. So that's one thing just to think about. You're at the end of the day, you are not necessarily paying back anything that you have to come back out of your pocket with. You don't have to work any extra overtime. You don't have to do any of that. It's actually coming out of the house. And then we talk about that, but then you also mentioned, which is perfect, is that if someone lives in their house the whole 30 years, you're not coming, you don't have to come out of the pocket and pay anything. You just continue to make your payments and just live your life, and you don't have to pay anything back except for when you're, getting ready to sell the house or whatnot. But you can live in your house for 30 years or whatever that loan term is, and you will be good. You don't have to pay it back at that time.
Exactly. They're never going to come knocking on your door and say, hey, we need these funds back. And you borrowed them, 20 years ago. And so there's a clause in there that says that until you've paid off the entire first mortgage, they will never force you to pay off that loan. So, you're talking a long time that you could be using this amazing benefit to your advantage without having to jeopardize anything other than making sure that you make your payments and, enjoy your time in the home.
Exactly. That's perfect. That's perfect. Let's shift over to the program itself and some of the different nuances that we have this year. So the program shifted to a lottery system. Is that actually fair? I mean, I know this is our personal opinion at this point in time. And how should buyers really be preparing for it?
Yeah, the fair part, I do believe that it was probably the best solution. And I say that because in the first year that they did this program, they did allow first come, first serve. And the unfortunate part about the first come, first serve is there were people that were doing things that were completely unethical to become first, and they were served first. And then later they found out that there was all sorts of practices that were not compliant, and it wasn't a fair situation for those who followed the rules. Um, Fast forward into the lottery system. Everybody gets a chance to apply, but then they randomly give you a lottery number, and that's the lottery number that you are using to figure out when will they actually offer you the funds. And so somebody who is number one on that list versus somebody who's number 500 clearly is going to have the best chance of getting the funding. um, and then there has been some talk about potentially designating a certain percentage, probably between 5 and 10%, to low income tract housing areas. And so, in the event that there was $200 million available, something around 20 million will be guaranteed for certain income tracts. So, there's still going to be a large amount of money, somewhere between 150 and 180 million dollars available for standard income. And ultimately, if you get your application in, you're going to have the same chance as anybody. And I think that that to me seems more fair than kind of a push to the front of the line situation where bending the rules starts to get more and more difficult to decipher.
Yeah, it makes sense. I know it just depends on who's looking at it, but I do hear what you're saying. One of the things is that that dollar amount, the millions and billions of dollars that may be available, it just seems like it's a lot. But can you share like how many people did it serve last time?
Yeah. Yeah, I think the number in the long run was around 16 or 1700 households.
Hmm.
So, ultimately, depending on how much the down payment assistance is for each, person or people that get it, it will probably be somewhere in that 1500 to 2000 families and households will be able to take advantage.
Yeah, thank you for sharing that. One of the things, maybe we can just lead right into this one a little bit, just to close this loop, because I don't want people to leave here discouraged. There are other California programs and down payment assistance programs that even if you're not able to get into the Dream for All, Mike is a good resource to like look at those numbers and tell you, hey, can you maybe loop in another program or even be qualified for another program if you're not able to get into this lottery system.
That's right. And oftentimes what clients that I'm working with are doing right now while they're getting their pre-approvals lined up for the Dream for All is we're also issuing the pre-approval for what if you don't get the Dream for All, or what if you find something before the lottery even happens that could work with the available funds you have now in conjunction with or without additional down payment assistance. Down payment assistance that's available right now is somewhere between 3 and 5%. And that's without having a lottery system. That's without having to jump into line and wait your turn. That's just the standard down payment assistance in California that you can get a hold of, with standard qualifications as well.
That's great. That's great. I'm glad we ended on a little positive note for folks so they don't think that, hey, if I don't get into this lottery, like up the creek or whatnot. But you're not up the creek. You have some options.
Yeah, you
Um,
definitely do.
so, there's the next question is not all loan officers can guide buyers through the Dream for All program correctly. What should buyers, now that's not a problem with you, Mike. That's why I have you on here. But what should buyers be looking for in a lender if they're serious about the program?
Yeah, this is crucial. So I touched upon this earlier, but just to go over it again, if you're working with a lender who's never worked with CalHFA, that's a huge red flag. So you want lenders who do at least a half a dozen, maybe just have had a few less than that in the last year, because we're versed with the exact guidelines and processing that's necessary to be successful with this program. The other part of this is that, and this happened many times last year, where at the last second I had people that were being referred to me because they had tried to submit their application and they weren't even using, the lender was not using the correct CalHFA forms. So they are very, very important, and they will reject your application if you don't have your pre-approval on the correct form. So, another real red flag, you need to make sure that you're getting the CalHFA approved pre-approval for your application. And then I'd say the last thing is that you want a lender who's going to process, underwrite, and fund this loan in-house for the CalHFA program. And so you don't want a lender who has to use a third party to get that done, because most likely not only does that mean they don't know really this program or what they're doing, but also they're going to lose control over processing and underwriting and funding, which, as you can imagine, is a crucial element when you're trying to close on a program that has a deadline. Because if you don't close on time, they can just take the Dream for All funds away and give them to the next person in line.
That's perfect. I actually just had a conversation with one of my buyers today, and the lender is so crucial, whether it's the Dream for All program or any program, because this particular buyer that I'm with, she bought with me last year, and we almost lost the deal. We were in contract, we got down to close, and then the lender just was not performing because they did not do things in-house. They had to go, actually, I should say I lost almost, not me personally, but two deals because the buyer came with their own lender, not my lenders, but someone else. And we
Yeah.
got down to closing. And since their underwriting was in another area, wasn't with in-house, they had to wait for approvals and it went back and forth. So let's just break this down into plain language before we end this question. Mike, what is underwriting, just in plain language for the people out there? Because they like, what is underwriting? I don't know. I just go to my lender and he does everything. He or she does everything.
Yeah. So underwriting is the practice of lining up a borrower's qualifications with the guidelines for the loan program that they're looking and seeking approval on. And then the underwriter is the actual person, generally somebody who is licensed for that role, to be able to give it the stamp of approval, which means that they have confirmed that the borrower or borrowers that they have passed the guidelines with the documentation that supporting their loan application, so that we are confirming that based on the qualifications that they've brought to the table, they can guarantee that we will lend to them not only on the first mortgage, but all the Dream for All loan, assuming that they get the lottery number that's selected. So when we say that you're getting underwritten, we're talking about approving you, and the pre-approve is in advance of not only this program, but pre-approval in advance of you making an offer on a home.
That's perfect. And I'm telling you, it just matters so much. You're getting into negotiate, well, for me on my side with the realtor side, where you're in negotiations with a house. And I'm telling you, with this Dream for All program, during that period of time, these sellers make multiple offers. So you have to be competitive. And if me on the listing side, if I get multiple offers, I'm actually not just scrutinizing the buyer, I'm scrutinizing the agent that the offer, and I'm also scrutinizing the lender. I'm looking at
Mhm.
that lender to see if that lender is experienced, because at the end of the day, we want us to all win. So everyone has to be qualified, everyone has to know what they're doing to get everyone over to the finish line. And that's so, so crucial.
So crucial. And oftentimes I just tell people, have you looked them up online to find out if they're reputable? Do they have a presence with other reviews and other people that have given them positive testimonials? Because if not, most likely they're just very new, or they've been living under a rock and not doing a great job. So, you want to find the experienced lenders and agents that have the best reputation and that are going to take you through the experience from start to finish, make you feel very comfortable, and of course get the job done, and then also help to make sure that you're doing everything right so that you have the best chance when this lottery comes about.
That's a great point. Okay, thank you. Thank you. That was a great conversation. So we're going to go into it. What if the Dream for All isn't the right move? But this is the question that I have. If a buyer, and we already touched upon this a little bit, if the buyer doesn't get selected in the lottery or realize the Dream for All just isn't the right fit, what are other real options should they be, talking to their lender about?
Yeah, of course. Just like I was saying a moment ago, some people can qualify for a home right now with their own qualifications without the Dream for All loan. And so it's always worth exploring what can you get as of now with what you have, and potentially layering that in with standard down payment assistance that is available today versus waiting. And there's always a cost benefit analysis, because if you could find a home today and properties continue to appreciate, or we see rates drop, which creates a lot of demand, and then all of a sudden you would not be able to win that home. Those are all opportunity costs we just don't know. So I always encourage everyone to know what they know now, and then have plan B, which is also putting their application in for Dream for All. Now, that being said, sometimes that's just not possible. The only way in is with this amazing government assistance. Can't buy without it. So you just have to go for it and really hope that this one works out, while still working on your own finances and saving and doing everything you can, so that if it doesn't work out, you still have the opportunity to buy.
One of the things I want to just follow up on that one too is that so if they don't, if the Dream for All is not for them, they can't qualify, they qualify or they can't get in. Which option really surprises buyers the most? Like for with these other programs, I think one of the things I'm just thinking off the bat is that I don't think people really even realize that there's these other programs that are even out there, options with other programs.
Yeah. So that definitely is a surprise. A lot of times people have only heard the kind of recent news, and the recent news is talking all about big loans like the Dream for All. So that can be a surprise that there are other options. Other surprises really come down to the guidelines that are required for this program, such as the first time home buyer and the first generation home buyer requirements, which essentially mean that at least one person on the loan, so if you're jointly applying, has to not only have owned a home of their own in the last 3 years, but they cannot have any family members, including their parents, that have had a home in their name, including themselves, in the last 7 years. And so if you don't have this first generation home buyer element, you can't qualify. And so that can be a big surprise to people because they think everyone should be able to qualify if they're a first time home buyer. Another one is income limits. Some people just make too much money, and every county in the state of California has been assigned an income limit, which we can look up and tell you. And if you make above that, unless you have elements of your income that can be excluded, like a bonus or commission or overtime, it's difficult to get the income low enough to make it into the program. So
Okay.
those two usually are the biggest, like, oh my gosh, I didn't realize that, which is why we do all this upfront work to educate our buyers and potential homeowners to make sure that they know everything about the program, but also so that they know how in which they're going to get approved.
That's great information. One of the things you said was about the family members. What family members are they including? The cousins?
No, it's the parents. It's the parents, actually. So if
Okay.
I said family members, yeah, it's the parents. It's biological or adoptive parents.
Okay.
So they do have that caveat, and they cannot have any present ownership interest in a home in the United States. So I had somebody last week whose parents own their home back in the country that they were from. Doesn't matter. It's the United States that they're talking about, and they cannot have any ownership interest even at the time of death. So it get very, very specific. If you had a parent who passed away and they own their home at that time, that's going to stay with them, and that's going to exclude you from being considered a first generation home buyer.
So what if the person has a parent that owned a house like 20 or 30 years ago and they don't own it now? So that's still not what does that mean?
So the clause is 7 years.
Okay.
And so as long as they have not, including themselves, and their parents have not held title, held ownership interest, or been named on a mortgage on a home in the United States. And that includes anything on a permanent foundation. And it also includes owned land. So,
Okay.
somebody owns a piece of land, that's going to count. And that's in the US only in the last 7 years. And then the and to that is that also that their parents have not possessed any ownership interest in the United States if they at the time of death. So if they've
Okay.
passed away and they owned a home at that time, that's not going to work.
Now that part seems unfair to me. Like if your
Yeah.
parents passed away like 20 years ago and they passed away with a property.
Yeah,
Yeah,
I
that
know that they're really trying to exclude people that have had the opportunity to own in a way that is potentially not possible for everybody. And
yeah.
so it definitely does exclude people that I believe really could not only could use the funds, but really should be able to get them. But, and the first iteration, I think they had like 25,000 people apply for, again, 1,500 or 2,000 loans. So, ultimately, everybody should have the opportunity to own a home. And if this program doesn't work out, there's several other, not only down payment assistance loans, but other grant programs and things that we can look into.
Yeah, yeah. I get it. It's interesting that if your parents didn't, if they're still alive and they didn't own a home and well, they owned a home like 15 years ago, you can qualify. But if your parent passed away with a home 20 years ago, you
You
don't. But
can't,
it's
right?
just,
Like, they should add that line, like, if the time of death they owned a home and it was more than even 7 years, in my opinion, but,
yes,
more than 20 years. So that might be a nuance that they'll work out. A lot of times
yes,
people bring up these ideas that, like, with this element doesn't work. And sometimes they revise the guidelines. So can
yeah.
always look into that if that pertains to you.
Yep. So thank you, thank you, thank you. Interesting conversation. So let's The last question we have here, a lot of buyers assume waiting is safer, like you kind of alluded to earlier. From your perspective, when does waiting actually become a bigger risk?
Always.
That's
um, I mean, for this program or not, the risks are we never know what the future holds. And what we've seen for like the 80 something years that home appreciation has been tracked in the country, there's only been 7 years, maybe it was 8 years, where there was negative appreciation. So home ownership has knocked it out of the park or at least gotten you on first base, something like 77 out of 85 years. And so because of that, unless we have another great recession like 2008 or pandemic where only a very small portion of that time there was negativity in the appreciation of a home in this country, you're just not looking at that many opportunities for the decision of buying today to be a bad one.
that's great. And I just want to share with whoever's out there looking and listening to this about the waiting. And again, there's never a good time to wait. I had I was just talking about this to one of my clients today. I have two people that, with both of the rounds of, Dream for All, they waited or they got approved, and we were writing an offer, and then they pulled out because they got scared.
Mm.
And my heart just hurt for them, those folks right now, because I think about the opportunity that they could have had with this program. And then now that, yes, the last couple of years, home prices in California, I don't know where everyone's at, but in California has went up. So now if were to get selected for this program now, they're going to pay more. Even though they may get the down payment assistance, they're going to be paying more for the house. And it's just, so if you are able to purchase, just try. And again, it's not even the Dream for All. I've seen where people have gotten waited for other down payment assistance programs, and they applied at the last minute and then the funds ran out. That happens too.
Yeah, and there's other programs which are more like the first come first serve, and those ones are tough because again, if you're procrastinating and waiting too long, then you just miss out. And when that happens, it's even more of a blow than finding out your lottery number was lower in the list because at least it's like there's you did everything right, and just randomly you didn't get the best one. But when you don't do everything right and you miss out, that doesn't feel good. So anytime you have questions, reach out and we can figure out, is this the right time for you? What are the steps that you need to take to make sure that you have the best chances of winning? And then what can you qualify for in the event that this program doesn't work out?
I want to just end this question on is like I like to open up my buyer consultation question with this. What does the next 6 months look like for you? What does the next year look like for you? What does winning look like? What does your housing real estate, what do you imagine, where do you imagine yourself? Because sometimes that is really the key question. What will make you happy in the real estate situation, purchasing your new home, upsizing, sizing? Because that's really where we want to be. And then from a financial standpoint or a strategic standpoint, between me or Mike or whoever your realtor or lender is, we will just make that happen. But what will make you happy a year from now? You don't want to then now be a year later and then now you're in the same spot.
You couldn't have said it better. It's so important to prepare and be ready and do everything you can to figure it out because everyone has a plan in mind. And executing that plan is not always easy when you don't have the right mentors and advisors helping you to make sure that you are being accountable and that you're getting it done. And that's what we're here for, is to help you get it done.
Well, thank you, Mike. We got one wrap up. If you
Sure.
can give a buyer one piece of advice before they decide whether to pursue the Dream for All or another path. I know we've touched upon it a lot, but again, this is kind of like the one advice. What would it be?
I'd say the number one piece of advice is to make sure that whether it's me and Suzette or someone else, that you have that consultation immediately. Because before you know it, this window will open and close and there will be no turning back. And at that time, if you find out, oh, wow, I wish I applied because I can't actually get a different loan program, at best, you're waiting another year to find out if they're going to open up the Dream for All again in 2027.
That's perfect. That's perfect. So, Mike, introduce yourself. Who are you? Why are you
I'm Mike
talking to
Coran.
me?
I'm Mike Coran, the mortgage man, and I'm here to help you with your mortgage plan. So anytime you need some help, you know how to reach me. And I would love to work with you, not only for Dream for All, but any loan program for residential property in the state of California and other states as well.
Perfect, perfect. And my name is Suzette Loggins. I am your premier realtor here in the greater Sacramento area. And again, just really just looking, and it gives me joy to make your real dreams come true. If you have want to contact us, I'll put our information in the link below. And then we will be having a survival, Dream for All survival webinar, just survival, just event. Like I just want to say this is an event. We can come and ask all your questions and get everything personalized to you. So I will be advertising that soon. But until then, we'll see you later.
See you later.